All right, hello, welcome traders. It is Tuesday, March 4th, 2025. Crazy wild day in the markets today. We got the tariff tantrums going crazy. Tariffs on Mexico, tariffs on Canada, increased tariffs on China. You got retaliation from Canada. You got retaliation on the retaliation against Canada from Trump. All kinds of crazy stuff happening in the markets today. And then we got Trump coming on to talk to the joint session of Congress tonight, which should make things even more interesting for tomorrow. So it's a challenging environment, but if you stick to your plan, things should work out for you, and we should be doing just fine. So let's talk about a few things here, and we'll get into some charts. I'll get into a trade from today. I'm going to look at the account with you guys, go through what's working, what's not working right now, and just give you a sense of what I'm doing. So right now, the recent market conditions have a ton of volatility in there. We've seen VIX elevating. You're seeing the S&P 500 fluctuating due to economic policies, a lot of global trade concerns, and the market's really reacting to all of these presidential policies and government interventions, reacting to the Federal Reserve, which we'll look at that and see what the Fed's doing right now or potentially looking to do. You got economic indicators, the job reports, we got inflation data, we got geopolitical tensions, we got trade tariffs everywhere, lots of crazy things going on. So we know that there's going to be a lot of volatility. You just need to take that into account with your trading. And if you can do so and stick to your plan, I think you're going to be much better off. So one of the things I want to take a look at today with you is let's look at a little bit of everything as we go. Let's start with yields and interest rates and what the Fed's doing. So let me share my screen with you, and let's go through all of these things piece by piece with you, so you can get a sense of what's working and what's happening out there. So let's get into it. Let me share. All right, perfect. Let's get into this. So what's going on with yields and interest rates right now? So if we look at the 10-year, that thing has dropped mightily from 4.8% all the way down to the 4.2%. At one point 4.15 today, ended up around 4.2%. So pretty good drop in yields, which is bullish for the market. So lower yields, lower borrowing rates should be good for stocks overall. It's not the major supporting factor here for stocks, but it's actually bullish for stocks. So yields coming down is going to be bullish for stocks if the yields can stay here. So we're looking at the 10-year yield. And as we see these yields coming down too, it can indicate a slowing economy a bit, whereas rising yields could show economic growth. So maybe a little bit of slowing here, but the slowing is not the worst thing in the world for the market. So a little bit of slowing should bring inflation down as well. And if we take a look at what the Fed's doing on interest rates, let's take a look at the CME interest rates here. Taking a brief look at what's going on here, we don't expect any movement on the next Fed meeting. Then in the May meeting, we got 38% chance of a cut. Okay, if we move on to the meeting after that, we've got almost a 76, 77% chance of at least one cut coming in June. Okay, there's actually a 25% chance of a double cut. So not only 25, but 50 basis points is on the table now for June. If we get into July, 40% chance that it's at least one, and probably another 45% chance that there could be two cuts. So overall, you're looking at about an 86, 87% chance that there will be at least one cut by July. If we're heading into September now, okay, now we're starting to look at, when we add these three together, we've got what, 64, 65, 72, 72% chance now of at least two cuts by September. And there's also this potential chance, okay, that at somewhere around 30 some percent, 33% chance of a third cut by September. Then we get into October here, and now you're seeing even more chances of of 2 to 3 cuts minimum. And then by December, okay, compared to where we are now, we're really looking in December at something in the neighborhood of what, 60 some percent chance of 3 cuts by December. So definitely the Fed is expected to start to cut a little bit. And if the economy starts to slow down, inflation should fall. Rates are coming down. The Fed may be cutting more. This is what we kind of expect to see happening here. All of these things are in play. So there's a lot of going on. But first thing is just having an idea of what the role of yields and interest rates are on your trading. Let's keep going and let's look at a few other things here. So let's get into looking at the markets themselves and some support levels. So we just looked at the TNX. Let's also take a quick look at one of my favorite charts, which is okay, the where'd it go? Where'd it go? My put call chart. Okay, so if we're looking at the put call chart, and look what happened today. So here on today, let's make sure these things are lined up pretty well. Okay, but if we're getting into these charts, in an upsloping put call ratio, the market's declining. We can see that it got underneath our zero point 0.7 here, and it's been heading lower, which heading lower on the put call ratio, this is the 10-day moving average. As that heads lower, and I can probably even draw that in here, but as this thing headed lower, okay, the market was heading higher. Okay, so the market's heading higher during that time. Then once we get back above here and we've been a bit overdone and the put call ratio starts heading higher, the markets will start to drop. But look where we are. We got all the way up here today to about 1.09, but we broke the one level. That doesn't happen very often. Okay. That only happens in a few times, maybe even a year. But last time it happened here, we saw a big rally. That was in August. Okay. Then it happened back here in April. Pretty good rally. Okay. Taking a look at that, that rally all the way up. Okay. Then it stayed up here for quite a while. Okay. And then that was really kind of topping out somewhere around this October 23rd level. Let's get these things all synced up a bit here. Okay. On this October 23rd level, when it was up here, you got to go all the way back here and look at the chart. Look at the bull rally that came right after that one. So right now, we are at fairly extreme highs on the put call ratio, at least today. Now it's settled back down, but that usually sees at least a little bit of a market turn. It doesn't mean it's going to be a gigantic long rally, but you can see that that's happening. So I just wanted to point that out today. And if we also look at the, the VIX, oops, let's move to here. Let's get into, we'll leave this one. Let's get into the VIX briefly here. Again, understanding some technical analysis and the market levels. VIX elevating up into the 20s. It doesn't happen very often. Last time it happened here was back in middle of December, but rarely do we get to this 23 level. I mean, it's only happened a couple times really in the last couple years that it happens. Now, back in 2022, we lived there for most of the year. Okay. And then we've really died off since then. A lot of zero DTE stuff coming, changing how the VIX works a bit, but still it's elevated right now. And these are fairly extreme levels that we hit today and backed off. Now, does that mean volatility is going to start to drop? Not sure yet. We'll see what happens with tonight and the rest of this week with tariffs and things like that. That are happening out, and we also have some economic reports coming out this week. But long story short is, and write it down, volatility will always, always, always mean revert. Always. So volatility will mean revert. Price does not have to. And so we expect that volatility, while it's elevated right now, it will mean revert. Now, how long that takes, It can take a couple days, it can take a week, it can take a couple weeks for volatility to come back down, or it can stay elevated for a good majority of the year. But on average, okay, everything time these things spike, it's right back down within 2 or 3 days into the teens. Almost every time, it's 2 to 3 days, 4 days, or something like that. We'll see if volatility drops. That's the biggest pain on some of our accounts here is that if volatility is rising, then you're going to draw a little heat if you're selling premium, right? But it happens very infrequently. So you can't just wait for high IV, which is the video I put out a couple days ago for people, is you can't just wait for that high IV to happen. Otherwise, you're never going to make any money because it only happens a couple times. So volatility only gets to these levels a couple times a year. Okay, you can't wait 2 months to make a trade. Okay? IVR, a little different. We do want, it's helpful to have high IVR, but again, you can't wait for that because if you do, you're never going to make a trade and you're not going to make any money with it. Is it helpful? Certainly. You can make more money that way. It gives you, I think, uh, better returns when it's high, but it does not change your probabilities. All right, because the probabilities are still the probabilities, no matter what the IV is at the time. It's just that higher IV or high IVR will give you better premium, potentially farther away trades, and maybe a little bit quicker in getting to those profits. All right, so let's jump in and take a look at what what we did today. Now the ES, it closed at 71 down, but it's actually only 35 down after hours right now. So we are off of those lows right now in the after hours session here, but they stop it here on Trading View. All right, so we did break out of this range today to the downside, but we came down, we came close to this 21 or 200-day moving average, which is the yellow, and we also were very close to the support level on the weekly. We're at the bottom of the Bollinger Band. We broke the bottom of the Bollinger Band here on the daily. We recovered a good chunk of that. In fact, we were only down 35 points a little bit ago at 58.80. So we're not too bad a shape on this coming off of these lows and really bouncing off. Pretty good day on volume. I don't know if this is a capitulation day or not, but there's a lot of good things that we're seeing here. But we'll keep an eye on it. So we've got our support levels here. That's what we're watching. If this support level breaks, okay, then we could have some significant pain to the downside on the weekly. On the daily chart here, a nice bounce off the 200-day moving average. So overall, not a bad day. I wouldn't say go rush in to buy, but with the market down at 1.2% on the session today, okay, during regular trading hours, people freaked out over a 1.2% drop. So it's we're only 6% off of the highs. Okay, this is which only happened about 2 weeks ago. So we're 6% off of all-time highs from 2 weeks ago. Shouldn't be panicking and watching your accounts blowing up or something like that. If you are, okay, you've got the wrong plan. You're trading too large. You don't have it hedged correctly. All right, let's keep going. Doesn't mean you can't take some losses. I stopped out on a trade today on RTY. Okay, followed the plan, stopped out, all good, moved on. All right, let's get into some quick sectors and talk about what's going on. Oil, so ES, nice drop. We'll see if tomorrow we get any follow through off of this reversal that we had today. No trades for me right now on ES. Oil continuing to just get beaten up pretty heavily here, but it came down. If you look at the weekly here, we came down to this support level, bounced off of it today, finished well off of our lows on oil. Stochastic momentum oversold on both the weekly and the daily. RSI getting towards that oversold level. So I think overall, I'm not calling a bottom on oil. You're not going to hear me calling it, but it's a pretty nice reversal candle at the bottom of the Bollinger Band. Would not surprise me to see some sideways action in oil. Do I think there's a big rebound coming? I do not. I don't see any catalyst for a big rebound in oil unless something geopolitically goes awry. Okay. But right now, if everything's going to slow down, well, demand for oil is going to drop. Okay. Demand for oil dropping with supply remaining is going to drop the prices of oil. All right, let's get into a few others. Gold today. I'm surprised with the drop in the S&P that we didn't see a bigger move up in gold, but we did see a move up in gold. This looks like a nice bounce off the Bollinger Band on the daily, back up through the 21 EMA. This thing could be ready to keep going higher. We're going to pull this resistance level over on gold. We'll see how it reacts when we get closer to that resistance level, but I think overall, gold still a pretty good flight to safety type of a trade today. Is it the best? Well, I don't know because maybe bonds has been the best flight to safety trade that we've been seeing. However, bonds had a nice little move lower today. And so I think bonds just getting overextended. People have been piling into bonds with all the uncertainty in the market. And I think today's reversal and I think today's selling also had a lot to do with the uncertainty of the tariffs. Everybody's thinking, oh, Trump will back off because Mexico and Canada will capitulate and China will capitulate and do something, and he'll back off and he'll reduce them or eliminate them or pause them like he did before. Well, no, that didn't happen. So they went into effect. The unknown is now known. The unknown of whether tariffs were going to start is now more known. Doesn't mean he can't change them and that the government won't change the tariff amounts based upon what happens here. And maybe they still could get worse, but the unknown is now known, and that makes the market more confident. Okay? The market hates uncertainty, and this today gave us some certainty. Whether you like it or hate it doesn't really matter. Certainty is good for the market. Okay? Doesn't matter what the results are, but certainty is usually better for the market than uncertainty. All right, so a nice move up on bonds, tipped over today, certainly helped us out. No trade for me on bonds here yet. It's had too nice of a move up, but overall, not too bad on bonds. Copper just kind of meandering around, it's kind of forgotten in all of this stuff. Maybe with the minerals thing that happens. I don't think copper is necessarily involved in that as much, but we'll see how things go with China and some other areas if and how China handles tariffs and what it's doing. But copper could see a little bit of a bounce in here, but right now there's really not much of a trade. And then silver, I think silver sets up as a really great strangle in here. I don't see it as bullish as gold, but I think it puts a little bit of a bid under silver. All right, so there we go. And then briefly, the NASDAQ, nice reversal off of its lows today. It too finished okay. In fact, the NASDAQ actually finished positive on the day, even though the chart here is showing down 69 points. In the after hours, it was actually up 68 points, 69 points after hours. So the NASDAQ actually finished positive on the day. I used this move today where we hit the 50-day moving average, the Bollinger Band on the weekly. And I also used this oversold stochastic momentum and the bounce off the 200-day moving average or the hit to it and the Bollinger Band on the daily. I use this as an opportunity to buy into the Qs. So I should say I sold. I actually sold leaps on QQQ today. Can it go lower? It certainly can. I think I was able to get in a pretty good price on the Qs today, and I believe they're up pretty nicely on the session. The Qs, when I got in through now, they're actually up 6% on the day. It's one day. It's not the gold. The gold's 90% return on those, so it's all good. All right, let's keep going. RTY, I actually stopped out of a trade today, a little short of my stop, but I don't really like where things are going. Even if rates start to drop and the Fed lowers rates, I don't like the way things are looking with tariffs and everything else on the small caps. So I stopped out, small loss, less than 1% of my account on that. So I sized small and took the L and moved on. All right, let's get into a couple quick stocks for you, and then we'll rock and roll. Nice day on Amazon here. Saw Amazon down, pretty much flat on the session, holding on to this support level that Amazon's at, tagging the 50 EMA and bouncing off of that for the week so far. I think oversold. I like where Amazon is in here. Meta, pretty nice reversal on the day, holding on to this support level as well. Oversold, but not on RSI. Could have a little more downside to go. Nvidia, nice day today, up almost 2 points on the session. It was up even more at one point. Oversold, stochastic momentum. I own a good amount of Nvidia. We've sold a lot of naked puts on it here, down around the 70, 80, and $90 ranges. This is paying off. I like where Nvidia is. We're seeing a little bit of a extended move up after hours on Nvidia and also on Amazon and also on Tesla here or on Meta, and then Tesla. It held itself today. So this is a really interesting doji pattern right here. A good indecision day doesn't mean do anything one way or the other on the session, but I know there's a lot of lines on this chart, but there's a ton of support of this trend line, longer term trend line on the weekly that we hit this week. You've got this support channel here, which was a previous pivot level that we actually closed on today and stayed exactly on. So you got this longer term trend, we bounced. This support, we bounced. We're at the 3 ATR and the Bollinger Band on the daily and held on to that. We're at the 200-day moving average, trying to hold on to that. We are at the uh, anchored VWAP as well here on the weekly and the daily. We're oversold on RSI. Doesn't mean we can't stay there. I just think this is not the worst place to start to ease into Tesla a bit. I didn't add, but I've got trades on in Tesla. Microsoft, same type of story as all of the rest. Maybe this is a decent opportunity. It was up on the day. Google up nicely on the day, up over almost 2.5%. While Google's not my favorite stock after the last earnings, still waiting for someone to convince me that Google's the right play. But this thing, look at it, the RSI oversold, starting to bounce. RSI is moving up. Stochastic momentum starting to turn. MACD starting to reverse here. Not the worst place to place a move on Google. I think you could absolutely go with something like a naked put or a credit spread. Put credit spread. Apple has hung in there pretty well. It's still sitting right here up around its 30-day moving average. I just think Apple could fall further. I don't like it here. Palantir trying to hold on to this support level that it's at. Again, my valuation on Palantir is around 40 bucks. It's trading at twice what I think it's worth. But I did sell a 45 put uh, a day or so ago, and we'll see how that plays out. If Palantir drops further into the 70s or 60s, I'm definitely going to want to look to add more to that. But I'll wade in with a small bit right now. All right, so there's where we are on most of the underlyings. And I want to take a point a look at a few quick sectors today. First off, we'll take a quick look at Bitcoin. Bitcoin up on the session, came all the way down, hit the Bollinger Band and the 300 or the 200-day moving average, bounced off of it. It's up on the day almost 2%. Bitcoin, I'm not saying that there's a bottom here, but this is not the worst spot for Bitcoin. I like where we are on Bitcoin. XRP, I don't get the magic of this thing. It's just hanging around this $2.50 mark. And that's where it's been now for, I don't know, since December 1st. So it's been up, it's been down, but essentially it hasn't moved in 4 months, XRP. So don't get too crazy about it going into this strategic crypto reserve. I'm not a big proponent. Doesn't mean it won't go up. Okay, if you got in back here at 75 cents, you had a nice run. Yeah. If you're trying to get in here at 250, I don't know. Not for me to say. It may go crazy. Don't hold me to it. All right, let's take a quick look at some sectors. Worst performing sectors on the day. First off was industrials. Industrials down almost 2%. Utilities down 1.6%. Retail down 1.7%. Um, Consumer staples down, 1.7%. There's not a lot up, but what was up today was pharmaceuticals trying to hang in there at these lows. Things that were low are holding on. So pharmaceuticals and biotechs. You can also look at semiconductors here that have been beaten up, trying to hold on to those lows on it. All right. Financials. Okay. Taking a look at financials, not having a good 2 days. Uh, we've been seeing some pretty good declines out there. JP Morgan and others. I think there's concerns over an economic slowdown, starting to put some pressure here, and the regional banks having a terrible day today. A lot of pressure on the regional banks due to regulatory concerns and some credit risks going on there. And in the tech sector, uh, things are just kind of hanging on uh, in here at the bottom. Not much going on with those sectors. All right. Bottom line, stick to your plan. Have good risk management. Use stop loss orders, have a plan, size appropriately. We've been in pretty good shape on our buying power, so I'm pretty happy with where we are on everything that's going on. Let's take a quick look at the account uh, and just run through where we are on the day. So overall, it's not the worst day in the world. We just This is the lazy trader account. Obviously, this account's down on the session, but these are long-term plays. We got plays going out a full year on Amazon. We got trades going out a full year or more on NVIDIA. Plus, this Jade Lizard is actually doing really, really well. As long as we stay above 105, this thing should give us a nice 100% winner. Here's that Palantir trade that we got into with that leap, doing just fine. We got a year on that thing. SPY, we're just sitting on some leaps in here. Yeah, they're down. They're not critical. This is a $400,000 account. I'm not that worried about them. TLT, these are up, dropped a little bit today, but these puts are doing just fine. Tesla, we've got leaps. These are down. So Tesla's the worst position in this account, along with NVIDIA right now, but it's just a net lick loss. There's nothing here to stop out on. The 190, 200s, we have a long way to go to get there. Doesn't mean we can't, but I like the trades that we have on with those. So there's a little bit of an insight on the lazy trader account. Let's go through the main trading account on the day with you too. So I'll share this one just to see what things are going on here. You can see overall a decent up day or a decent day today, pretty much flat. But oil, nothing to do here on oil. We're in a strangle. That thing's totally fine. We're in a 111 trade. It's down just fractionally, but we're nowhere near a problem area. We're close to the trap though, so this thing could start to pay off a bit more. ES here, most of this is just old put debit spreads. We've already cashed in on the naked puts, so all of the losses that you see here are pretty much just old put debit spreads that will eventually wean themselves off over the next 3 to 4 months, 5 months. We do have an at the money 111 trade. This thing is up a nice 250% in the money on the put debit spread. We're still 630 points away from the naked puts. This is a great trade. I love this trade. We're going to leave this thing cooking. No sense taking that off. We can hopefully get this thing up to about 1.2 or $1,200. So I think we can get to 500% to 600% winner on that trade. We got a naked put here. So it's up 30%. Part of one of our 112 trades. Nothing to do with that. We've got another naked put here. This one's down 76%. It's fine. It's in good shape for now. If the markets just trade sideways to slightly lower, this thing will be fine. I'm not too worried about it. And if it hits a 2x loss, we stop out on it. And we're not anywhere near that right now. Plenty of put debit spreads here. They're all up, making money. Here's our last naked puts. There's only three. There's only three naked puts trades in here. This thing's down 40%. It's a newer trade. It's only been on 8 days with the markets heading lower. It's all good. We've got our volatility hedges on. We've got some ratio hedges that we haven't started to mature into those yet. And then more put debit spread, put debit spread, put debit spreads, put debit spreads, all winning trades in there on the put debit spreads. Here's our gold covered strangle. This thing's up now, what, $300 roughly on 2,700 in cap. So that's up 10% in here. Perfect trade. Love that trade. Bonds, we got two strangles. They're a little bit under pressure. It's down, yeah, 1,400 on this one and 1,500 on this one. Good days in bonds today with bonds pulling back. We are nowhere near the call strikes at this point in time. We'll just let those things cook. Nothing to do there. IBIT. This trade, we have already generated on IBIT, just so you know, because you can't determine everything. Here's why I don't always share the account, because you can't get a good reading on this because everything's in my tracking sheet that I have. But we have generated $1,800 now, almost $2,000 on covered calls, and the long calls are down 2,500. So we're net $700 down, while Bitcoin's down like 20 some percent. So totally fine with that. Trade SPY, we got plenty of naked puts on, and these leaps, nothing to do here. They're not being challenged. Certainly, they're going to be down when the markets are down. We have plenty of time left on these trades. We have almost a full year on any of those. And then we do have a poor man's covered call on SPY. The nice thing here is, as of today, we've now generated $1,400 worth of premium by selling covered calls. Yes, the longs are down 1,200 or 2,300, but when you subtract that, we're down only about, what is it, 10,527? Yeah, we're down like $900 on this. So that's it. Only down $900 net on our poor man's covered call, and we're going to just keep cranking cash. We churn out about $500 a week on this. So in 2 weeks, if things hold without getting significantly worse, we'll be pretty much flat with the market down, which is what I love that. Love that. And then Tesla, this is our problem child, but it's not the worst problem child that I've ever had. But it's down. Okay. But we have been generating, so far, we have generated $3,600 in this account in the last 28 days. So the covered calls have generated $3,600 on this in just over 1 month. So in roughly 38 days on this. Pretty good. So I'll take that $3,600. You subtract it from the $10,000 that this is down. And yes, we're down about 7,000. That's not a 2% loss for us at all right now. And you can see, if you take into account the current covered call, we're already up 710 on that. We still have 385 of extrinsic to go on this thing. So we'll get another $1,000 out of this trade. So if Tesla holds here at all and starts to bounce, we'll be in great shape. We've already generated a ton of cash flow from these trades, and we have plenty of time on that Tesla trade. In fact, how much longer do we have? 318 days. So in 318 days, as long as Tesla starts to drift up and we keep making $1,000 a week for the next 50 weeks, I'll take $50,000. The accounts, that trade's only down 10,000 right now. I'm expecting that trade to be a huge winner, as long as Tesla doesn't go down to like 200 or something along those lines. Then we'll stop out. We'll take our 2% loss and we'll move on. But right now, we're generating enough cash flow to keep this thing rocking and rolling until Tesla starts to bottom out here in the markets. All right, longer video. I want you to stay safe. I want you to make sure you've got your risk defined. I want you to make sure you have your stops and you're heeding those stops. If you've got your vol hedges on, they really aren't doing much here. VIX is only up to 23, 24 points. That's not going to trigger a vol hedge. You need something in that 40, 50, 60 VIX range. to trigger that. So they're really not going to do a whole lot for you. But if you have your regular hedges on too, with the market selling off, you should be in good shape. I have all those put debit spreads. Just make sure you've got your trade plan there and you sized appropriately and you heed your stops. Okay. I saw some people saying, well, my account's wiped out for the year. Is it, how can your account be wiped out for the year, okay, on a 6% move off of the highs? What are you doing with your account right now? Okay. Make sure you keep your buying power free, make sure you're trading smart, and make sure you're following your plan. Have a great evening, folks. We'll see you later. Bye-bye.